What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we'll be taking a look over here at the Bitcoin price chart along with the altcoin market. As time continues to tick closer, for the longest period we've seen for Bitcoin and the cryptocurrency market to go into a recovery, as we of course wait for life to wake up over here over in the Russell 2000 and for there to be a broader expansion to happen in the stock market, if we're even going to get one. But as we sit patiently waiting for prices to wake up and make a decision, and for the clock to continue ticking closer and closer to what we've seen for expansions to happen in the market, I figured we'd touch on a couple of topics happening in here that are going to be taking place over the next couple of weeks. Like we talked about in last week's video, we have the unemployment rate. We also have CPI coming up, but also looking at the market from this perspective of how you've seen the S&P, the NASDAQ, and the Dow all setting those new highs. We've all heard of the Magnificent Seven, yet we just can't seem to get any type of expansion to take place in the market. And I saw somebody talking about growth versus value when it comes to stocks, and this being a period of everybody chasing growth like your Mag 7, and how it's actually periods of value rotation that we actually tend to see the better performance take place in. So we'll touch on this as it pertains to things like the Russell 2000 and why that is so important. I don't find there to be much to say about the actual Bitcoin price chart as we try to get through the next 2 weeks here in September. The three main events that we have lined up coming up here in the next couple of weeks are: one, on this Friday, we're going to have the unemployment released. As we all know, when that was released there on August 2nd, that was part of the cascading panic that took place there that led to August 5th. The last expectation was a 4.1 and it came in at a 4.3. The forecast for Friday's reading is a 4.2. So an expectation that unemployment will drop. We've seen this gradually tick up to the highest levels we've seen in a couple of years for unemployment. That release will be there on Friday, September 6th. For all of those who have been like, the Fed is going to cut rates and it's going to be super bullish. Remember the Fed's mandate. It is inflation and it is employment. Put out one fire, start a new one. This is the new fire, unemployment now. Hence, market looking to make sure we're not going into a recession or unemployment spike that leads to a recession. And that'll be right here on September 6th. Another way to see how unemployment has become a sticky issue is looking at the U6 unemployment rate, which is going to include people who even have jobs, but maybe they took kind of a crummy job just to keep themselves financially afloat. Like, for example, someone who's like an electrical engineer but is flipping burgers over there at McDonald's. Yeah, they're employed, but they're kind of just doing it to survive, and they're still actively looking for a job. That has also been an increase in that last reading that we had back there in August was a big bump up. So we'll get a reading on this as well there on Friday, September 6th to see if this can chill out. That has the potential to be a catalyst. Then on September 11th, we're going to get the last CPI reading, or Consumer Price Index, the measure of inflation. Our most recent reading over here was 2.9%. For the last 4 months, we have averaged 0.1% month over month. If we were to put up a number like that again, which we've done now for an average of 4 months, say you did it again here for the September reading of August, we would see year over year CPI drop to 2.5%. Finally taking out the floor definitively at 3% that has been holding it since July of last year. So about a year and 2 months. That's coming up on September 11th. So unemployment, CPI, then the Fed cut. Both these elements important for the Fed. Then market tries to sniff out whether or not there's a soft landing or not. And we try to see if this thing can go ahead and get moving rather than this being the Magnificent Seven story. Now, we've talked a lot about expansion and how we haven't seen that over there in the Russell 2000 and how that has always been a predetermined factor when it comes to any type of bull run that's taken place for Bitcoin in the cryptocurrency market. Another way to look at that is really just growth versus value. I saw this being discussed throughout the week. There's a couple of different ETFs out there you can look at, such as the IWF, or the iShares Russell 1000 Growth ETF. There's also the iShares S&P 500 Value ETF, or IVE. And if we measure these as kind of like a ratio, like IWF over IVE, so growth over value, we can kind of get an idea on what's happening at a particular period in the market, whether or not it's growth that's being chased after, or if it's a rotation there into value. As we can see, since January of 2023, growth has been what people have been chasing. To understand the difference between growth stocks and value stocks, growth is typically going to be, your tech stocks. They're growing faster than average, and people are trying to buy them to take advantage of the rapid price increases. Whereas value is going to be your more boring stuff like financials, healthcare, energy, oil and gas, pays dividends, super boring stuff, rather than the AI chasing next tech cool thing like you would see in growth, but instead boring old value. But we can kind of look at this and see like when is growth being chased versus value, and how does Bitcoin do during those times? And that's what you're seeing here, and that's why there's all the colors put on top of here, and we'll kind of go through that. Now, if you don't know this about 2020, it's actually that the NASDAQ broke out from its pre-C19 highs quite early and went ahead and touched them again by June 20th. Remember, the sell-off is there in March, April, May, June, back to the highs, right? Tech. Right now, we have Mag 7. Back then, we had FANG, Facebook, Apple, Alphabet, Netflix, all that stuff. And notice it took some time for Bitcoin to end up breaking into its new all-time high. It actually ends up showing up here to get an actual breakout, not until December. So 6 whole months after that took place. Whereas you could see here for like the Dow Jones Industrial Average, rather than breaking into the new highs there in June, it took all the way until November. The S&P got its new high here in August, whereas the Russell took as long as the Dow, waiting until November. But as we know, this is really the moment where Bitcoin gets going, crypto gets going, not chasing big tech, growth, hot names in the S&P, but once the rotation into small caps happens. What's interesting about that dynamic is you can see in here with growth versus value, there was a big bull run essentially in a small amount of names, chasing the growth, chasing the next hot thing, chasing the parabolas. And what we see is once that cooled off there in August and the rotation to value happened in here, where growth is performing worse than value, this is actually where we end up taking off. It is no longer a consolidated market, chasing a few names, chasing the next hot thing and the news story, but a rotation into value. That's where Bitcoin goes. While the market, the S&P 500, is still trending up. But notice during the entire run up of FANG, chase the next hot story, nothing was really going on for Bitcoin in that time. Yeah, we'd retraced about 50%. Getting back to $11,000, but then pulled back down to 8 or 9. But then once that dynamic shift changed in the market, boom, that's where we're able to get going. You see that also happening back here. Value starts to rotate. Once growth becomes the hot news story again, breaking out and grinding up, the story is no longer about Bitcoin and crypto. It's just a select number of names. However, upon the reversal of growth in here and all throughout here, as it's range bound, this is where the whole bull run takes place for Bitcoin, going from $200 to $20,000. Then growth becomes the story all over again, and we go into the bear, as a handful of names become the thing everybody is chasing, which is like what we're experiencing now. Where only 11% of the S&P 500 is outperforming the S&P index. 89% is underperforming the actual index itself. So we have a dynamic here where the S&P 500 is in an uptrend. Whether it's reversing or not is up for a different story, but it has been in an uptrend. And then what we see happening in here is a very big change has happened here in the growth to value. Now, historically, when that happens, that's been a good thing for the cryptocurrency market. Then, when the growth to value reverses, so do we. But this initial rejection from the top was what propelled that rotation to happen in the market back in 2020 and 2021. Again, still a continuation happening with an uptrend in the S&P 500, still liquidity coming in, still an ever-growing market cap of the entire stock market. If that were to be the case here, with a reversal in growth versus value, that's historically a good thing. We can look at them individually to see how the market dynamic has happened in here after that sell-off took place there on August 5th, to see here is growth, still below the high. Here is value, fully recovered and off into new highs. And if you look at growth and the structure it has with that lower high, sure is awfully familiar to the NASDAQ and the NDXT, one we've talked in detail about over the last year, expecting it to do something pretty similar to what we saw with Bitcoin back in 2021, where you get the new high, you get the new high, you get one more stab, one more stab, and then done. And then now the question is it done after doing a 702 Fibonacci retracement right there, right on the button? So when we look at growth versus value, big tech, the consolidation of the market, it seems that we're like at a pretty pivotal moment here where this whole super consolidation thing of Mag 7 is trying to resolve itself right now. The question, of course, is does that lead to a rotational play for the rest of the market? And still, we don't have that answer. But I think we're seeing a lot of different signs when it comes to growth, value, big tech, consolidations. There's a dynamic shift happening underneath the hood right now in this market that just saw an extreme happen when comparing growth to value. And so, like I've said over the last month, I think that marker right there on the NDXT or the NASDAQ 100 technology sector is the marker that would be the end of the tech bubble that has massively consolidated the stock market. The $1,000,000 question is going to be, as we go through these coming weeks, is does that give a play over here for the remainder of the market? It does seem the dynamic has shifted from the chase of the Mag 7. And the big question is, will things like this, like NVIDIA that have printed these massive bubbles, cause a smooth rotation or a cascading liquidation? I would love to say this is going to be easy. We've seen exactly this before. But we already know, just based on what we showed here when it comes to the Dow Jones, the S&P, the NASDAQ, and the Russell, that since the great financial crisis, we have never had this exact same scenario play out before. For Bitcoin's 2013, 2017, and 2021 bull runs, there were never these circumstances where the consolidation reached this level of extreme and the Russell just gets completely left behind, where all indexes go, but the Russell is totally left behind. In 2021, worst case scenario is it just eventually went when the Dow Jones went. In 2017, it went right along with everybody at the same time. And in 2013, it went right along with the S&P and the Dow. It has never had this dynamic where it just gets utterly left behind. And as we're trying to draw all these confluences between market dynamics and the crypto market, we know we're dealing with a set of circumstances that are different from every bull run we've seen in crypto before. But what we see about every bull run for crypto before is that these dynamics were all essentially the same. 2013, 2017, 2021. You have them all just happening the same way. All the indexes break out. Here's Bitcoin. Boom. 2-year bear market. Go with it. All these indexes break out. Boom. Bitcoin. 3-year bear market. Go with it. Indexes even give it a lead. All indexes go in 2020 and 2021. Boom. Bitcoin. Hum right on along with it. But never before do all indexes leave and get out and be this consolidated and then leave behind all the small and mid caps. And I think if there wasn't such a big lesson that took place there in the cryptocurrency market in 2021, I don't know if I'd really even notice this to make a big deal out of it. Maybe I'd be like everybody else, just kind of screaming, the indexes are up, everything is going to be great, who cares about the Russell 2000? Had there not been that like big lesson that was learned there in 2021 in the crypto market, where we saw something very different, right? Where we saw Bitcoin set the new all-time high in November of 2021. We saw Ethereum set the new high, Solana set the new high, and just convinced, right, everything is going to be okay. And then no alt season comes after that, right? And it was this big head scratcher of why did that happen? Why did we set the new highs there in November of 2021, but no alt season came after that? That's never happened before, where we set a new high, but then the altcoins don't go. All the altcoins topped back in May, but Bitcoin sets its high in November. That's never happened before. So what was happening? And so right now with that consolidation of seeing that same thing, with it being the growth chase, it's that unruly paranoia of being like, that same thing isn't happening here in the stock market, right? Where just like crypto, 90% of it didn't set new highs in November. And the stock market, 89% is underperforming the index. There's not something similar happening here, right? But it seems like we're at a really peculiar spot where a lot of those answers look like they're going to be coming very soon. because we're seeing that happen over there in the NDXT. It seems like that growth chase is coming to an end. We're seeing that when it comes to the ETS of growth versus value, technology sectors, the way NVIDIA is behaving, and that we're approaching these times where these big catalysts are going to be coming when it comes to unemployment, when it comes to CPI, and when it comes to Fed rate cuts. We know the businesses that have been hurt the most from the rate hikes have been small businesses. The cost of capital has been incredibly difficult to get. So anybody who didn't have extremely strong balance sheets in the first place has been struggling tremendously. And now we're left with the big question coming up of, can all these catalysts propel a rotation to value or a rotation to expansion to mid and small caps? And I, of course, do not have that definitive answer for you on if this is going to get out. But if it does, then I think we're going to see the whole cryptocurrency market follow along with it, because it always does. And it's always the deciding factor. And I've described a lot of this moment as being like navigating uncharted waters, because we haven't had this dynamic in Bitcoin's entire life history. Not where the indexes are up, but there's no expansion in the market. There's no breadth, right? It's super consolidated to the most millionth degree. And when we really just kind of reflect on what all of this was really like and just the narratives going on over these last several years and what we dealt with, right? Like, we knew inflation was coming, front ran it, right? Inflation finally gets here. The crowd comes running in because they're like, inflation, inflation, inflation. And really that's the end of the cycle, because the crowd is there at the very end. Then, the Fed starts saying, hey, we're going to fight this stuff. The Fed sells all their bags, right? A lot of people forget that. The Fed sold the top. They banned themselves from owning stocks. But then they go through the most aggressive hiking cycle in history, right? And everybody's fighting it the whole way. No, they can't go that high. They can't go that high. They just keep going higher. Then finally they pause, and then everything rallies into the pause. And now here we are. Inflation's now back. We're finally at the point where the Fed is going to cut the rate. We've waited years for this moment. And now we're going to find out what point of history ends up being correct. Do we end up just continuing to operate on the same time frames, which I know we all want to look at this and say Bitcoin's operating on these cycles, but this is the cycle of what expansions have been in markets. This is the amount of time between expansions in the stock market, right? We're now at that point of those answers coming to a conclusion. We're now going to find out what happens with the Fed, right? Everybody in disagreement. Everybody saying, hey, the Fed rate cuts are going to be super bullish. It's going to be the money printer turned on. We're all going to rally. And then you go look through history for the last 3 cutting cycles and you say, well, all of those cutting cycles actually were really, 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 really terrible. And if that ends up happening, then we end up deviating away from anything we've ever done in history, where we take this long to get back to here. And then finally, at the last second, we just don't do it. That would be so different, right? The thing that would be like right now, if we were acting exactly like 2013, 2017, and 2021, we would already be at a 0% Fed funds rate. They would have already gone through the cutting cycle. We would already be at 0, right? We've already gone through any trash. We would already see the Russell 2000 breaking out into new all-time highs. We would already see some altcoins going ballistic right now. Those are all the things that would be consistent right now to the past. And right now, none of those are happening. But the thing that has happened is we haven't crossed through the cusp of time, for Bitcoin at least. And this thing has followed along really, really precisely. And we are now going to approach these major milestones where inflation is likely going to get down to 2.5% finally. The Fed is finally going to cut. We're going to go through these moments, and we're going to see how the market's going to react from it. And I personally think, regardless of the scenario, it's going to be crazy either one. So I think buckle up, touch some grass. I think we probably are trying to make too much out of every little thing that happens. But I think the snowballing of events will all take place here very soon. I can look at individual crypto charts and I can say to myself, man, it is time for this thing to rip. Based on capitulation of how long it's been in this market, we've never gone this far. Based on the actual peak of the market, you've got like 6 days of how it's never been that far, which aligns with Bitcoin. September 9th, never been that long to not be able to set a new all-time high. And so sit back, try not to make too much out of the noise that is happening day to day. But I do think that we are at a super critical time. I think we're watching this change in dynamic happening between growth and value. I know we're approaching these longest periods ever here in crypto, and that these deciding things are right on the cusp. And I know these big major decisions are coming in economic data here over the next couple of weeks, and that the market's going to react to it in some way. And I know we're doing it from locations that can be rejections from retraces, or they can be expansions. And this market has sat here saying, I'm not going to let you know which way I'm going just yet. I'm just going to mess with you right here. But I think those decisions have to come to a conclusion very soon. And if we look to crypto and timing cycles, all those things tell us they resolve to the upside. But then when we look at market dynamics of the stock market, they all tell us a totally different story. And so what I really wish is that we could come in here and I could go back to 2013, 2017, and 2021 and tell you, look, this is exactly how they all played out. They all played out this precise same way. Everybody wants to operate on 4-year cycles. And so here's how they went. And so what I do is I try to present that to you and show you, here's how they went, right? We can look at the stock market. We can look at growth to value. We can look at all the indexes breaking out together and say, here's how they all went. And so it's not that I don't know how they went. I know how they went. And what I know is things are a little bit different right now. And we need some resolution to take place in here. And so the best thing I can do is try to say, how long does it seem like it's going to be till we see some type of resolution? And it seems like whether or not this is going to end up happening has to resolve very soon. You've gotten all the way here. You've gotten all the way here. Inflation, 2%. Fed's going to cut. Massive slam happening in the growth of value. And I treat staring at charts and looking around for any type of signal in here to try to report it here on the YouTube channel as a full-time job. And no matter what, no matter how much time I put into it, these are all the exact same things I constantly get drawn back to. And I unquestionably feel like a broken record when I come onto the channel. And XRP Thor said on Twitter yesterday, it's starting to get spicy out here. And I responded, it makes sense. The market rejected retracements at irrational exuberance, extreme risk taking, and euphoria. Market convinced it was a bull, and 6 months later, the stock market hasn't expanded. Like a broken record, which I'm also tired of playing the same song, but it's the signal. And there's no question. I come on here and I say these things, and I assume you're like, it's the same thing. And it is. Even for me, it feels like a broken record talking about it. And especially as we get closer and closer and closer, and this thing approaches closer and closer, and these major events come, it's a big anticipation of like, gosh, what is going to happen when these events unfold? What is going to happen when that next unemployment reading happens, which was a trigger for August 5th? What happens when that CPI hits 2.5%? What happens when the Fed cuts? And it's so close. I think it's like, you get so impatient for it. Kind of like when you're at work and like you have a vacation coming up, but suddenly time just slows down. That's really how it feels right now. So I'll do my best not to create too much content, really reiterating the same things over and over again. But I think me doing that is really just kind of communicating to you, these are really the major things I'm paying attention to. And my gut feeling after looking at all the charts and spending this much time in it, I think these next weeks are really going to be a moment in time that we will point to throughout all of history moving forward. I'm not so sure like the last year of just ranging with the RTY has really just been, oh yeah, look at that week there on July 12th. I don't think that, but I think it's coming soon. That a big moment is right on the horizon. So, all right, I'll quit rambling. This video is super long and I'm getting it out late. A new newsletter was posted throughout the weekend over there on blockchainbacker.substack.com. We really dive into a lot of the stuff going on right now in markets as we approach this rate cut coming on September 18th and talk a lot about the economic data and inflation. It's such a wild time right now. You can check that one out right here. Of course, you get access to all the past ones as well. And I do audio record all of these. This one was a little bit longer, almost 29 minutes. course, you could check out bcbacker.com for over 40 videos and 11 hours of content teaching you how to set up your own charts and indicators within TradingView and CoinTrader Pro. There are links down here in the description of this video to bcbacker.com and to the newsletter at blockchainbacker.substack.com. And I think the way I'm going to treat this week so that I do not sit here and totally regurgitate my words in another video is I'll tell you kind of my plan for videos and content this week. This video's out. This one's a little bit longer. It's like 25 minutes long. Tomorrow, we will have markets in the morning. And then Thursday, I'm just going to sit back and watch the markets as they get ready to position themselves for the unemployment report, which is set to come out 1 hour prior to markets opening on Friday. So yesterday was Labor Day. It was a day off. Today's Tuesday. We got a video. Tomorrow's Wednesday. We'll have markets in the morning. Thursday, I'm going to sit back and watch the market get ready. Friday, before the market opens, we will get the unemployment report. We'll see how the volatility is in response to that. And then we'll have a video discussing what's going on in the markets there on Friday. That was our last high volatility event, was unemployment. If there's a chance for something big to happen in this market, that's our first event coming on Friday. So we'll keep our eyes peeled on it. Otherwise, check out the newsletter, read all the stuff that we put into there. And otherwise, I hope you had a great long weekend. But till the next one, I'll catch you soon. That's it. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you are new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.